ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. The ETF business is bigger than ever, and it's getting more global. Let's talk with John McKenzie. He's the CEO of TMX Group, which owns the Toronto Stock Exchange and just made a major acquisition in the ETF space. John, thanks for joining us. You have been a leader in the ETF space. There's more than 900 ETFs listed on the Toronto Stock Exchange. You recently acquired ETF education site Verify. They run that big ETF exchange conference in Miami Beach that I go to every year. You go to as well. Tell us about this. What does TMX and the Toronto Stock Exchange get with this Verify acquisition? Why ETFs right now?
Well, thank you for starting with that, Bob, and thanks for having us for this today. I mean, you said it almost right in the question up front. We see the ETF, the exchange traded fund, as essentially one of the most important innovations in retail investing in the marketplace history, at least in the last 20, 30 years. And Toronto Stock Exchange was actually the original pioneer of the ETF more than 30 years ago. And so, as you mentioned, we've got almost 1,000 listed ETFs on exchange right now. And what we were really looking to do is, how do we get deeper into providing more support to our clients? So, more capabilities to the 40 ETF providers that are listed in Canada, more resources and capabilities into global ETF providers. And quite frankly, what Verify really does really well, index creation, so ETF providers can create new products, and great solutions so that they can reach a broader investing audience. So that's the 1-2 punch of what we were doing with that investment. And quite frankly, it serves another objective of TMX, which is to get more global. It's one of our stated objectives worldwide, is that we want to be more global than local. And this is a great asset to help us build, not just in the US, not just in Canada, but around the world. Yeah,
global reach seems to be the key story here. The ETF business, I've been covering it for 20 years. It's maturing a little bit here. It's $8 trillion in the United States. Most of the money still goes into essentially index funds. Where do you see the growth prospects for the ETF business in coming years?
Well, really see it in 3 places. So one, we are getting to a more mature stage, but I don't think we're there yet. Because when you think about the difference between both kind of where the ETF maturity is versus mutual funds, there's a lot of room to grow. And even I'm sure the US is a similar market in terms of the inflows and outflows. ETFs in Canada were up, 38 billion last year. Outflows of mutual funds were 57 the other way. But it's still only about 1/3 of the assets under management are in the ETF space versus the mutual fund space. So there's underlying growth still to go. There's underlying global development still to come, because as much as Canada and the US are more mature, other parts of the retail trading universe around the world are not there yet. So you've got that global growth as well. And then you layer in a couple of the pieces. More creativity coming from product manufacturers, so looking for more thematic indices where they can create that next alpha that gets investors excited. And quite frankly, more reach to end investors. So a lot of the fund manufacturers, they're not like the old mutual funds that had their own advisors. So they're still building in terms of their investor awareness. And as they do that, that's actually going to allow them to add more products like thematics, but also actively managed ETFs. So I still think there's a lot of creativity to come. And I mean, you mentioned the conference that we were both at. I'm a big believer that the next innovation was in the room, and we're going to hear coming out of that from the connections that made, what are going to be some of the next great products that come out of this.
Speaking of next great products, I've got to ask you about Bitcoin. It's over $60,000. It seems to have moved up since the spot ETFs were approved here in the United States. But most people don't know this. You and the Toronto Exchange listed the first spot Bitcoin ETF. That was the Purpose Bitcoin ETF on the Toronto Exchange. That was back in 2021. So it took 3 years, but the U.S. finally got a spot Bitcoin ETFs in January. So describe the Canadian approach to crypto, and does it differ from the U.S. approach? You've been ahead of the game here on this.
Yeah, I'd say the approach and the products themselves are not materially different. The approach in going to market is probably where Canada is different, because our community is maybe tighter in terms of the relationships between both the manufacturers, the exchange, and even the regulators. We can work cooperatively on new products. So that's why you actually see a lot of the innovative ETF product often starts in Canada first. So even when you go back to the development of fixed income ETFs, they were launched in the Canadian market first before they became more prevalent in the US. And so if you look at both fixed income and crypto in that lens, what do they both do? The ETF actually provides a better tool for a retail investor to engage in a product like this than going at it directly through whatever over-the-counter market exists for them. And when you compare investing in the ETF versus investing in spot crypto, you've got more certainty as to who you invest with. You've got a regulatory framework around it, better disclosure, better liquidity to get in and out. So it's everything that improves the product for the retail investors. So by working with the manufacturer, working with the regulator, we were able to do that quicker. And I'm glad to see the U.S. has followed suit on it.
I would note that other companies in the United States have already filed for a spot Ether ETF. There are already Ether futures ETFs that trade here. But Canada, again, you already have a spot Ether ETF. That's the purpose Ether ETF. You seem to be ahead of everybody on this. Do you see like ETFs for many different cryptocurrencies, or is there something particularly special about Bitcoin and Ether, and the other ones are sort of in a different category? I mean, what prevents anybody from doing, many different kinds of crypto ETFs?
I think at that point, it's really about scale. Like any other ETF, to be successful, you need to have enough of the underlying activity, the underlying asset, for it to be have that broader investor appeal. And that's probably the limiting factor on other currencies or tokens. But the product and the structure of the ETF would certainly allow for more products to be done. And as this market develops, you could see also indices being created of multiple types of assets that could be the benchmark for future ETFs as well, where you could have a basket. And that's exactly the kind of thing that VettaFi can help us do.
Yeah, we have that in the U.S. already here. Let me move on here. When I think of Canada, I think commodities. Energy and mining are a very large percentage of the Canadian economy, larger than the United States percentage. Over half of the publicly traded mining companies in the world list with you on the Toronto Exchange. And yet commodities in Canada have underperformed the U.S. market, I think because of the dominance of tech in the United States. Can you address that? How do you feel about commodities right now and its place in the portfolio?
Well, it's a good time to ask that question because we're coming right up on PDAC, which is the Prospectors and Developers Association conference. It's the biggest mining conference in the world. It's going to be coming to Canada shortly. And I do think there has been a timeline on bringing new investment into the space. It's been a little slow in the last couple of years as people are still figuring out what's the demand going to be for lithium, for cobalt, what's the permitting going to be to open up new mines and really provide the minerals that we need for transition. So that has, been a bit slow in terms of actually developing in Canada, in the US, and around the world. But when you look at the outlook on it, and you got the point exactly right, we've got over half the world's listed mining companies, and several hundred of them are actually engaged in kind of new economy mining as well. Again, these battery metals that we need for transition, that's all going to need financing. And we've also done, and historically, about 50% of the world's financing in the mining sector. So this is an area that, as the market heats up, if we see more certainty around investment, there's potential for a really interesting deal flow on financing these companies. And what you find is those companies that are getting financed in this market, they're developing properties around the world. So they're not restricted to Canadian assets. They are global businesses that list and raise capital here. Right.
So your strength is in mining, base metals, rare earth metals. This VettaFi deal seems to help you. You now also own the Alerian MLP index that you got from VettaFi. There's, of course, an ETF associated with this, the Alerian MLP ETF, which is pipelines, essentially. Tell us about that acquisition and what you want to do with that.
No, you're exactly right there. The other side of resources is in energy, and we're one of the largest energy markets as well. And so having that lens through the MLP market on having a really great product around energy, helps with the bona fides of our ability between TMX and VettaFi to create other energy-related indices in that space. And a little known fact on TMX is we also operate the largest energy market aggregator in the world. So that's our Trayport business. It's based in London. And it's actually the single screen if you want to see all the European energy markets, particularly gas and power, on a single screen so you can interact with that liquidity. You do it through a TMX property in Trayport. And we are, in part of our globalization strategy, we're actually working on developing that more into the U.S. market as well. So we have multiple pieces of our U.S. strategy of bringing more capabilities into that market, and automating trading around U.S. gas and power is one of those strategies we're working on currently.
And very briefly, I remember having a discussion with you a little while ago about essentially you have an incubator for small companies at the Toronto Stock Exchange. We're trying to figure out a way to get more companies to go public here, but you have a sort of an incubation process. Can you describe that to us briefly?
Yeah, and if you think about it from the outcome, last year there was so few IPOs anywhere in North America, yet we brought 25 new companies onto the senior market through that incubation regime. So we run the TSX Venture Exchange. It is a small cap market. In some cases, compared to the United States, you might even call it a microcap market, where a company can raise public money at a very early stage, Series B, Series C, $5 million, $10 million, and then grow on the exchange, where they can come back and do cyclical re-raises as they build their business. And when they get to that size where they're senior market ready, we can graduate them up and give them that senior market exposure. So we've been doing this for 20 years between TSX Venture and TSX. We've graduated over 750 companies, so ones that we incubated ourselves on the junior market and brought to the senior market. And it's actually that unique structure of junior and senior was what makes the Canadian market different around the world. With that, we've been able to list almost 250 global companies that didn't have that same access to capital in their home market, and they come list with us in Canada to do that. We built all this out of the resource market. That's where it was originally designed. But it's worked really well for technology companies as well. So, resources, like you said, is the biggest sector, but the closest number two is technology, because a lot of technology companies are also multiple rounds of fundraising to build their businesses. So they can do that on the TSX Venture Exchange. And when they get scale, graduate up to the senior market, the TSX, and expand and grow.
Yeah. John, it's been a pleasure talking with you, and good luck with the Verify acquisition. I know all of those people, so we'll want to stay in close contact with you. Thanks again, John. John McKenzie is the CEO of TMX Group, which runs the Toronto Stock Exchange.